I want to talk about support and resistance. So I'll be highlighting the most important things that you need to know in order for you to effectively trade with support and resistance. So the first thing that I want to put out of the way, it is the issue of time frames. So when you are choosing time frames, we know that we usually have a high time frame, a smaller time frame, and other people, they usually have medium time frame. So it's usually 3 time frames. So what you need to do as a trader is that you should avoid identifying key levels on a smaller time frame because it will confuse you. But what you should do is that you should identify these key levels. So when I'm talking about the key levels, I'm also referring to support and resistance. So you should avoid spotting these key levels on a smaller time frame. So make sure that when you are using maybe the 1 hour as your high time frame, make sure that you spot those levels there. I will tell you what you need to do when you go to a smaller time frame. So in my case, I use the 1 hour as my high time frame, and then the 30-minute as my medium time frame, and the 15-minute if I need further confirmation. So it's usually the 1 hour and the 30-minute, but I go to the 15 when I need further confirmation. So let's get into it. So I hope you are all familiar that resistance, it is usually areas where the price makes a significant turn to the downside. So when price is heading upwards and then it turns all the way down, those are resistance areas. So those that I'm highlighting now, those are areas of resistance, because we can see that price was heading up and then all of a sudden it changed the direction to move down. And then obviously on the flip side, support, it is where price was heading downwards and then it bounced heading all the way upwards. So it's where there is a major change in direction. Just keep that in mind, where there is a major change in direction. So then once you are able to identify support and resistance, how then should you implement it in your trading? So I'm just going to be illustrating mostly with the resistance in this chart, but we apply the same process when it comes to trading support. So in this case here, we have a resistance firstly in this area here. We know that we've received an impulsive move heading upwards where the buyers were very, very aggressive, and then they failed in that area, meaning they were rejected in that area. They faced a challenge. That's where now the sellers began to take control and move the price all the way down. So that's our point there, and what you need to know is that you need to spot the highest point of that area. So in this case, it is that that tail or that wick all the way up there. That's our highest point. That's our high where price was rejected from there. Now, so I usually like to draw my resistance and support using these rectangles because they show me levels or region instead of a specific price. So when you're using the horizontal line, it shows you a specific price, but when you're using this triangle tool, it shows you a range, so you are able to accommodate other levels as well. So with our resistance all the way up there, and you can see that our resistance wasn't only tested once, so we can see that price is rejected firstly here, and then because price has memory, it was then rejected again at that same area. So it faced rejection again on that same area. That's why it is important, because usually the players or the buyers and the sellers in the market, they have memory, so they know that at this point, at this price in the past, there was a rejection. So when the price approaches that level again in the future, they will know that it's likely that price gonna reject again, or they will repeat the same decisions that they made in the past. So here, if there are a lot of sellers here, when the price comes in the future, they will again sell in this area because they remember that last time we did the exact same thing. So I'm not gonna be talking about order blocks a lot, but it is just the same principle. So this is where the smart money is. That's why it creates these major turning points. So once you are able to identify these areas that, okay, here is my resistance, here is my support, what should you do? This is where the other time frames come in, because now you need to identify a change in the structure that is making up the trend towards that resistance. Let me just repeat it. So we have this move here towards that resistance, and this move is made up of waves. So every move in a market is made up of waves. When I'm talking about waves, I'm talking about highs and lows. So you can see here we have our highs, or if you like, you can call them minor resistance and support. So we have our highs and our lows in this wave, or in this trend that is heading up. So what you need to do as a trader is then observe how these structures are changing as the price is approaching that key level, or as the price is approaching that resistance. Let me just go back to a smaller time frame. So here in a smaller time frame, we're just gonna pay attention into this area towards the resistance, because that's what matters. So we can see that price was flowing smoothly going up, and then all of a sudden we received a high here, which is higher than the previous one. Obviously we receive a higher high, and then after that we receive this low. Now it is very, very important. This is the low which you should pay attention into, because it is our most recent low. And then here is our next high. If you can see our next high, it is very, very close to our previous high, and you can see that it is not far, meaning there wasn't too much strength when it comes to the buyers. So the buyers, they faced a challenge as price approached that resistance. So that's one key thing. But then you have to wait now for one thing to happen. It has to be a break of the structure. Now the structure has to be broken. What am I talking about? This low that is indicated here, it has to be broken. Let me just remove some of the drawings for clarity. So what you need to do, it is for us to wait for this low to be broken here, and then when this low is broken, that's where now we are going to be certain that indeed this resistance is reversing the price. So you shouldn't, the mistake that traders usually do is that they then make decision there and there. They will begin to sell here, which is very, very dangerous, because you are then depending on luck, because it is still like that price can go all the way up. So you shouldn't be relying only on luck, because price can still go all the way up. But then when price now begins to break this low and closes below this low, now we are certain that indeed the sellers, they are giving us strength. Why? Because now they're giving us a low which is lower than the previous one. So when we receive a low that is lower than the previous one, it automatically tells us that now the strength is shifting from the buyers to the sellers. So you should be waiting for a low which is lower than this region here, and once you receive that low, then you'll execute your trade on your next high. Usually the high is somewhere around this area, again giving us a retest, then that's where you're gonna be taking your trades. But even if the high is above this area, just somewhere around there, it is still good as long as this high is lower than that previous one. But it is, the chances are it's going to be lower than that previous one because of the momentum or the strength of the sellers, which is increasing. So that's where you're going to be executing your trades all the way there in that area. And then when it comes to exiting, you need to make sure that you pay attention to the recent structures. For an example, here is one resistance. We know that the resistance usually change to become support, so you should pay attention to your recent structures. We have resistance there, we have support here. Now let me just extend it so that you understand what's gonna happen when it comes to exiting your trade. So we also have then our main support all the way down there. So what you need to do as a trader is that you need to use these areas to partially close your trades, meaning when you open your trade, as the market moves down, usually a lot of people don't like to open multiple positions. So if you are someone who opens multiple position, you should be using these areas to scale out your trades. So when price approaches this area, you close your trades and then you move your stop loss as well, so that now the other trades, they don't depend on your capital, but they depend on the profits that you've made on the first one. So what you need to do is that these levels, you're going to use them to partially close your trades when you are someone who's opening multiple positions. I hope this is making sense. So as price approaches these areas, you should also pay attention on how the strength is declining, because these are also minor resistance and minor support. So minor resistance and minor support, they do sometimes create major moves. As you can see here, let me just extend. You can see here that we had resistance previously, and then that resistance even here, it paused the price, and here it created a major turning point for the price. Although it's a minor level, but it does have an impact on the price sometimes. So I hope this is making sense. So don't undermine these levels. When price approaches those levels, make sure that you observe or you pay attention on how it is really changing as it is approaching those levels. I hope this is making sense. I'm just gonna keep it short and leave it here. Thank you guys for watching.